All right, so we're going to talk about the watch list for today, and then I guess what I'll do is just go over the trigger levels. So we'll talk about what each of these trigger levels are and why they were set, and then talk about potential entries and plays around these set trigger levels. This is straight off the watch list. This is what's posted every day. There are multiple ways that you can trade this. So, if taking notes is your thing, I recommend that you do that. So, you can refer back to them in the future. The first one we're going to talk about is AMD. This was a long over 77 and a short below 74. So because AMD gapped up on the daily chart right here, there's your gap. That is why the short level was set at 64. It doesn't get much easier than that. The gap area should act as a support, and if it fails to act as a support, there's a chance the stock falls back into the gap and fills the gap. So for that reason, a short below 64 was set as the trigger level. The long trigger for AMD was set right here at 77. So we have our two levels, 74 and 77. I'm going to delete this just so it's easier to see the screen. And that's the levels that we plan to play around for the day. So why was it set at 77? Well, because that's the high from yesterday's price, yesterday's price action. This is all-time highs, right? So a break over 77. Don't mind, the little candles up here, 77.21. That to me, it's insignificant. I see the majority of this price action happening at 77. So, when you're trying to figure out levels to play around, take into consideration the majority of the price action, not the outlier data. This to me is like, this would be like a fake out. Outlier data, but 77 is the true resistance. So we didn't need to set it at 77.20, although maybe it would have been a little more accurate. But yeah, for that reason, 77 was the trigger. So let me go ahead and move into. I'm going to move into the 1 minute chart time frame here. But this morning, when AMD opened up, it was consolidating. And so when you have a stock that's moving like this on the 5 minute chart time frame or on a larger time frame, you can't see the smaller price action. You can't really see like what's actually going on in this consolidation right here. So I teach to trade with the 5 minute chart because it gives you confirmation. But you can use the 1 minute chart at the same time that you're using the 5 minute chart to help you get a better entry. So to do that, you would just click right here. If you're using Thinkorswim, select that second gray box. That's going to give you an extra chart down at the bottom. And you can look at the 1 minute and the 5 minute chart at the same time. So switching over to the 1 minute chart time frame, this is what I saw for AMD, and this is why we took this long over 76. It was mentioned in chat that it was playable over 76 rather than waiting for it to get up to 77. So from 76 to 77, it's a 1.2% move. The contracts, they ran 20%. That's plenty enough to take profits on. So I didn't feel, like we needed to necessarily wait for this to break 77, even though that was the true level for it to break for today. We didn't need to wait for it to break that point. Here's your consolidation on the 1 minute chart time frame. So this is those same three candles. You see from up to 645, the same three candles of consolidation, and you have a flat top resistance right here at 76. We have a series of higher lows being compressed up to this point, and during this time frame, during all of this consolidation right here, you have this volume leveling out. And so when we got this, it kind of looked like it was faking out right here. But when it came down and then popped back up, and this volume candle right here printed higher than the average volume during this consolidation, that's what really put it on radar for us. So for that reason, over 76 was the play. There's your first move up to 77. Now, we knew to take profits at 77 because it was the all-time highs, right? It was the high from yesterday's trading session. That's usually going to act as a level of resistance just about every single time. So when this pushed up, there's your first play. Entry 1 being taken right there. Profit target right there. The second entry that we were looking at taking was a pullback entry. This was a little bit more of a risky trade just because this could have easily been a true rejection and never even recovered and went back up. But sometimes you have to be willing to assume risk whenever you're trading. Actually, all the time you have to be ready to assume the risk. So when this pulled back to 76, understanding that the old resistance here should act as a new support, that's kind of where we got the idea that this may hold for a second play. And yeah, as soon as this candle right here printed, this is what gave us that confirmation to take the trade and enter long. Now let me flip to the 5-minute chart time frame and show you. If you're watching just the 5-minute chart, you're not seeing all of that. You're not seeing that bounce and that consolidation right there at 76. Do you see what I'm saying? If you're watching just the 5-minute chart and you're waiting for this to bounce, you've basically missed the move, because at this point you're not going to enter this long right here, knowing that resistance is right here. That's just too risky. You know where is your risk to reward on that trade, right? You're risking all of this downside for a very small reward at this point, because remember, it hasn't broken this resistance. We didn't know that it was going to break this. So knowing that this was playable on the 1-minute chart, this was playable off of 76 back up to 77, that was entry 2. Okay, so entry 2 would have been here. Your stop would have been set maybe 70s. I think 75.5 is what we mentioned. 75.6. But you know, regardless, if it didn't bounce at this point, you should just cut the position very quick. So this is going to give you that low risk play to the bottom side with that high reward to the top side. We took profits here. I mentioned to take profits there because again, this was, I think, another 20% move or so, and we didn't need to wait on this to reject off of the high of day. The high of day, this all-time high, we knew that was a resistance point. So yeah, we just go ahead and secure the profits. We've been in a market, guys, where scalping has been the plays lately. Now today was different. Today was a change. A lot of tickers ran actually, and we had some follow through on breakouts. But just going with the flow of the market the past week, really this whole entire week, it's been scalpers. It's been scalp moves that have been profitable. So for that reason, you know, I went into today's session thinking, you know, anything over 10 to 15%, I'm going to just go ahead and take it, and I'll re-enter later if I need to. So yeah, for that reason, we took profits there. Now this went ahead and ran all the way up to this point. Those contracts actually were 100%. But I said don't chase, right? Don't chase the move after the breakout of 77. This was all-time highs. Let it do its thing, and we'll look for a pullback entry. So just like this area here, where it pulled back to like that old resistance being treated as new support right here, that's what you get here. So pushed up, old resistance, this mark being treated as a new support here. Now it's about 20 cents off, but you have to again, you have to kind of understand that everything in trading is not going to be exact. So you just try to get the best entries possible. You could have done something like this, where you drew a trend line and then watch this volume too decreasing, and then once you get that pop move over the trend line, you know, watch your volume, and when you see that volume start to pick up like this, then you take your entry. So there was another entry right there off the pullback. This probably could have been an entry, like a pullback test of 77 as support and then go, But I really wanted to see, I think I would have wanted to see this kind of like consolidate at this point first and then push up. It just kept going. So yeah, we waited for a sizable pullback. There's your cross over the trend line and your next move up. So again, sticking with the scalp ideas, once this pushed up, went ahead and took profits. Now at this point, I kind of stopped alerting the trade. But this is why I said we should watch the 5-minute chart and the 1-minute chart at the same time. Because if you go back to the 5-minute chart time frame, you're not seeing all of those little intricate details, but you do get to see the bigger picture. So the bigger picture in this case would have been, we have a kind of like a bull pennant pattern forming, right? Consolidating, lower volume, and then a breakout over the bull pennant here. There's your volume coming in to confirm the move. A break over the high of day, and another run up to the top side. There are a couple of ways to play this. The first one being that once you get this confirmation candle breakout top side, once you get that, despite what this volume's doing, you can enter early for more profits, but you're going to assume more risk. So another entry for AMD would have been here, and you likely would have been, if I'm entering here, I'm looking to take profits at a break of the high of day. So somewhere in this area, probably on this candle. If you wait, that's one way to play it. If you wait, you're missing out on all of these profits here, but you get this extra confirmation, you get that volume move, you get this 5-minute candle to close over the top side. But yeah, you're just missing out on these profits here. So you could have entered here, right? And probably use the same profit target trading strategy that we use with taking profits at 10% or 15% or 20%, whatever this run was. After that, I did not see a play. I liked this consolidating here for the end of day. It just never got back over this like flat top line of resistance. So that was it. That was quite a few different entries that you could have taken. A lot of them scalp moves. Of course, you could have just entered and held through the entire thing. But like I said, with the market the way that it's been lately, this has been a scalper's market. So it's not something I would have really wanted to buy a bunch of contracts on and scale out throughout the day. Maybe, though, now that the sentiment has changed, maybe we can flip back to doing that tomorrow. At any rate, it's up after hours. So this looks good probably for another trade tomorrow, provided that these levels sustain. And now our old level of resistance and new support will become our new short trigger. So I'm going to leave that line there. And if this opens up above 77, we can look to play it off of 77. If it breaks below, we can look to short. If it pulls back to 77 and holds, we can look to take it long, risking off 77. Or if it just continues straight up and makes a new high above, whatever the pre-market high is, maybe 80. If it breaks above 80, we can look for that continuation move up to the top side. Guys, and you should be taking you should definitely be taking notes on this. So AMD 77, 74, good to go. Okay, let's talk about SQ. So 131 and 128. All right, I'm going to go to the daily chart time frame and show you. Actually, no, I'm going to go to the 5-minute chart, and I'm going to explain the levels first, and then I'm going to go to the daily chart and show you how they're relevant. So 131 was our long trigger, okay, and 128 was our short trigger. So I'm basing this. This is really messy, but I was primarily basing these levels off of pre-market data. It gapped up after hours yesterday, and so because all of this price action was like consolidating at this point, it made sense to me that that was going to be our level to break in the morning. And then on the flip side of that, whenever it gapped down, in the morning, it held this area as a support. This was also the short trigger was also based off of this being below yesterday's closing price. So you have in trading what's called a red to green move and a green to red move, and the idea is that a gapped up stock that opens higher than the previous day's closing price, when it falls below the previous day's closing price, it's likely going to continue down. And that's gonna be your green to red move. The opposite is true for a red to green move. If it opens up lower than the previous day's closing price, it's going to open red, and it crosses over that price threshold, then it's gone from red to green, and it's likely to continue up for the rest of the day. It doesn't always happen. You can see that here. This was a short, but it did recover by the end of the day and actually held 131 as a resistance. But that was primarily why I was basing 131 and 128 off of this pre-market data. Now, if I go back to the daily chart, 131 also happens to be where all of this resistance is in the past. So it's not just relevant for pre-market. It's been a resistance here. It was a resistance back here. So for me, I felt very comfortable taking it long over that price point. It didn't get there, opened up, and immediately came down. This was a tough one to trade because initially, right, it opened up and went immediately green. We don't trade in the first 5 minutes. It rejected, kind of, right, came all the way back down. I almost was saying that we should buy this dip, but remaining patient, we watched this dip get bought up, and then it just came straight down. This was kind of your first signal right here that it was rejecting 131. If you were staying patient, though, like we did for AMD, if you're staying patient and not trading in the first 15 minutes, then you watch this second candle close below 128. One thing that I always say when you're trading these watch lists is to consider your risk to reward. That's your RR. When a stock moves from the long trigger all the way down to the short trigger, you want to stay patient. So that's kind of what happened here, right? It moved all the way down from the long trigger to the short trigger. You're likely chasing the move at that point if you try to enter short here. This pulled back a little bit. If we were watching the 1 minute chart time frame, maybe you would have seen that it was consolidating here and then made a new low, and that could have served as an entry. But again, I maybe feel like you're kind of chasing. It's better to just wait for a pullback. So when this fell all the way down, this level at 128 remains relevant. It's falling down, right? At some point, it's going to bounce. There is your pre-market resistance here. Old support turns to new resistance, and there's your yesterday's closing price acting as a resistance as well. So when this pushed up to this price point here and started consolidating, then fell, that was your entry. Short entry number one. This came down, what was that, 126. So almost from 128, 127.75 down to 126. I traded this. I took this trade. That was 20% right there. Second entry, same thing, right? Pushed right back up to this price point. Second entry there. Your stop loss is going to be 128, and it almost came back down to the same. You would have kind of had to hold through some chop here, but it did come down. So if we were to look at that on the 5 minute chart time frame, it's a little clear. It's a little cleaner. You don't get those precise entries, but you still get the same idea. This one, this actually probably would have been the best entry for you, just because you didn't have such a big rejection initially, right? And that's just if you're trading off the 5 minute chart time frame. After this, I didn't see another trade. Sometimes whenever you have a stock that breaks back over the trigger, so because this was a short trigger and at this point it's breaking over the short trigger, that means it's kind of recovering for the day. Maybe a long entry could have been possible either here on this candle for this little move up, or when it pulled back and tested this area as a support, you possibly could have taken a long entry there for a scalp move. This level was relevant all day though. Once it reclaimed 128, there was an entry here that could have been taken. You know, you could have taken an entry somewhere along this price point. Maybe not on this first candle because you would have been holding through all of this chop. But yeah, there was a few different entries possible here. The main ones that I want to talk about though, or that I wanted to mention, were these two shorts. So yeah, if it goes red for the day, I don't even look at this for a long idea. So if it's down below the trigger, I'm not trying to fight the trend. Even if this extended move is what percentage is this? That was a 4.5% drop almost. I'm not looking to take this long. The trend is down. I'm not fighting the trend. I've lost way too much money trying to do that. Not trying to catch the bottom. I'm not trying to take this long and average in and say, oh, it's got to recover at some point. I'd rather just wait for the rally, short the rally, low risk play to the top side, high reward to the bottom side. Unfortunately, we didn't get a new low here, but the scalps were definitely there. Definitely possible. All right, let's talk about Tesla. So 1505 and 1475. All right, on the daily chart time frame, this is really hard to read. I can't even tell you what's going on with this right now. It's up, down. I think this is more chop than anything. So it's hard to say, oh yeah, Tesla's going to break out, it's bullish, or it's going to break down, it's bearish. So for that reason, I base these levels off of the 5-day, 5-minute chart time frame, and I was taking into consideration these most recent, the two most recent trading days, but also I guess a little bit of action right here the day prior. So here's what I see. Well, ultimately I see this. So we have like a clear trend down, and then we have this clear line of support across, right? And so make of that what you want. Some kind of bear flag or bear pennant. I mean, if you're looking at just these days, maybe it's a bull pennant, right? It just depends on where it's going to go. But yeah, so Tesla 1505 and 1475. 1480 for me, right here where I just had that line drawn. 1480 would have been the clear level to set the alert at. I know Tesla too well though. Tesla doesn't trade exactly based on those levels. It likes to fake out. So for that reason, I moved the trigger down $5 on purpose, just so we didn't get that fake out below 1480. And it worked out perfect, because if you're trying to short this below 1480, look at all this chop you're caught in. You're like, oh, it's breaking down, let me short, and it comes back up. Then you just get stopped out. Oh, it's breaking down, I should have held. And yeah, so there's just all of these little fake out wicks right here. It came down immediately, and 1475 was never broken as the for a short entry. It looked like it was forming this bear pennant, right? So there's your pull, there's your pennant, your triangle pattern. That's what it started to it started to look like it was forming. And just because a pattern is bearish, it doesn't mean that it has to break down. And I put this in chat. I think by this time I was done trading. I just stepped away. I put this in chat that if we broke over, if Tesla broke over this level here, 1490, you could look to take it long over that price point. That would have been, at this time, it would have been a break of this trend line and confirm the move up. And that's what it did. We're going to talk about that in a second. 1505 was this was the long trigger. Because Tesla came down first and never tested 1505, I wouldn't have, right? So maybe you could have taken a short entry here, but I wouldn't have looked at taking it long at 1505. After it came down and tested the short trigger, I'm not looking to take that long over all. I'm not looking to wait and take it long over this point. You're missing out on so much profit. 1.5%. You know, why why would you wait for this to go all the way from the short trigger up to the long trigger and then take it long here? It doesn't make sense. So the smart trader, right, you adjust, adapt, identify a pattern here, the bull pin it or bear pin it, and make a plan. Yeah, so here's your move. Came down. We knew that 1480 was the support point. 1475 was the trigger, so we didn't get faked out. These wicks were hitting the trigger. It never broke down. Here's your breakout over the bull pennant on higher volume. There's your average volume coming down, right? There's your big volume bar printing up. There's your pop up and over the pennant pattern, and it actually closed over the top side of this pennant. So that was your confirmation move. It pushed up and it actually pulled back here too. So you could have waited and taken an entry. There's two ways to trade this. We just talked about those two ways on a different setup, but let me show you. Entry one, you could have taken an entry, somewhere at this price point. For you would have been assuming more risk, but more profit, right? And then maybe taking profits at the break of the high here. So you would have been looking to take profits there, or don't chase the move. Wait for it to pull back, test the 1490 level as a support, take an entry there, and then look to sell at or near high of day. This also happens to be, we've talked about this, 1500, that's a whole number. We know that those whole numbers act as areas of support and resistance in the market, natural areas of support and resistance. So this move from here at 1490 up to 1500, that probably would have been the trade that I took right there. Very easy. I hope that somebody caught this, because this was, I wouldn't say that this was an A+ setup, but I think it was really easy to read. I think that even if you didn't know that this was a bear pennant pattern, and you didn't know where the support was, if you even just drew your line the wrong way, if you just use the trend change technique, right, a break over the trend line on volume like this, that's kind of all that you need to know to take a trade, to make a trade profitable. So as soon as you got that high volume break over this trend line, that's kind of like a signal. Okay, the trend is reversing, and let me change my bias. I'm no longer short bias. I'm long bias. I'm not going to wait for this to get to 1505, which was the long trigger. I'm going to take an entry right here, capitalize on that move up. So that was it for Tesla. The last one was QCOM. Okay, so 105 and 102 was our triggers. This was a tough one, because what we have is we have this massive gap up, and if I go into the daily chart time frame, actually I'm going to back it up to the yearly. We have no previous data to go off of. So for that reason, the only thing that I had to base levels on was pre-market data. And so for that reason, 105 was our long trigger. You know what, I could have moved it up to 106, but I want to take into account the majority of the price action. Where is the majority of the price action occurring? It's not here at 106. It's mostly consolidating under 105. So I felt all right taking an entry over 105 long, and our short being below the low right here on pre-market or after hours, whatever that is, right there. That would have been our short at 102. This one, it just faked out. If I was trading this, I guarantee you that I would have got stopped out on this trade too, because it came down, right? Here's your gap. If I go back to the daily chart, there's your gap in price. It looked like it had potential to fill this gap coming down. And so not trading in the first 5 minutes, we would have waited, saw that this pushed up. I might have done something like this. There's your trend line. There's your break below the trigger on seemingly higher volume here. Let's look at the 1 minute chart actually. Yeah, Okay, so there's, yeah, this definitely would have faked me out. There's your break. If you entered here, you probably could have gotten out with profits, but if you're basing this off the 5-minute chart time frame, this to me looks like a it's coming down. Here's your little rally. All of these wicks are telling me that there's selling pressure. That's a bear flag. There's your break below with a close below the trigger. I would have been short on this. And then it turned around and came right back up. So for that reason, I included this in the watch list results as a loss. There's no way, short loss. There's no way that you could, you would have got faked out on that. There's no way I can consider this a win. Even though it ran over 105, you know, we know now not to take it long after it hits the trigger like this, or hits the short trigger and goes all the way up to the long trigger. We know not to do that, right? After what I've just discussed. So for that reason, you know, I couldn't include the long trigger as a winner with this big fake out at the short trigger. You know, I try to keep those watch list results as honest as possible. And so, yeah, here's the deal. It came down, and if you got faked out on this short, the first thing that you would have done was place your stop loss probably right at the trigger, or maybe even at the top of this candle here, and just taken the L. But then you can flip the bias on this. So, you know, there's not much you can do about these fake outs when they happen. But when they do occur, one thing to remember is that the trade isn't always, it's not over, right? If you're wrong, it doesn't mean that you are, you're done with the trade. You can flip the bias, close the short position, enter a long position, flip the bias on the trade and make some money. So it was possible that you could have taken a long entry once the high of day at this point was broken. So either, you know, on this candle or on this pullback, this little consolidation area, and then look to take profits from, what is that, 103.50 up to 105. That would have been a decent scalp. Here's your pullback though, back to this 103 mark. And somebody posted this in chat today in member signals. I think it was CB Trades. That was on. Let me verify that. I'm pretty sure that was on QCOM. I don't know what signal was given from them. Over high of day. Okay, so they were looking for an entry over high of day. This was your entry. There's a couple of different ways that you could have played this. So if you didn't take this move here long up to here, which I don't think I would have done that. You could have waited for this to pull back. So understanding that this old resistance is new support. It's already been treated as a support. Perfect pullback to this level. Also VWAP. That's your purple line. At this point in time, VWAP is relevant. When you get that pullback to VWAP, you could have entered long here, risking off of you know, just below VWAP or something, and caught the move back up to the high of day. Or you could have done what they did and waited for a break of high of day, which was just over 105 at this point. So 105.25, that would have been your long entry there, and this ran up to 107 for some decent profits. But like I said, because it had that major fake out on the in the morning right here on this kind of like bear flag formation, I have to be honest with it. I have to include it as a short loss. Cool. That was the fastest like 35 minutes I've ever done and ever had. So guys, if you have any questions, type them up here and I will get to them. That's all that I have for the watch list review and the potential entries that we could have taken intraday.